I'm exhausted because I have to work myself to the bone just to get them their basic necessities.
I think it's absolutely disgraceful.
You're probably left with the impression that inflation is pretty bad, and I can't blame you. Most of the people you see on TV don't have the slightest clue about what inflation actually is. I can tell you right now, inflation is by far the best of the three alternatives. But to understand all that, and to be better educated than most people in power, we need to spend a little time on understanding how inflation works, and why we even have inflation in the first place. I'll even try to make it a bit of fun while we're at it.
Inflation is causing stress.
Bad news about prices in the grocery store.
Historically high inflation.
Why does everyone talk about inflation? Why is it important for you as a consumer? And why do countries allow inflation to happen in the first place? There are so many questions and misconceptions about inflation, but in this video we'll try to answer these questions and make you better equipped to understand how the economy actually works. To help us understand and answer all your questions about inflation, we're going to tell a story. A story about a woman named Sarah. Sarah is like you and me. She does her grocery shopping, she pays her bills, she has a job, all that good stuff. After going to the same grocery store for quite some time, Sarah is noticing that the food she buys is more expensive. It's not massive jumps, but without her changing anything in terms of consumption, the total cost is higher. Sarah has become a victim of inflation. And like you, Sarah is probably thinking, piece of god capitalist just sitting there on the people, getting rich, doing nothing. God. Okay, that might be a bit excessive, but you get my point. The first question we gotta ask is, why do we even have inflation and what is it? Inflation is when the prices of goods and services increase over time, meaning your money doesn't go as far as it used to. For example, Sarah, who usually spends $50 on her weekly groceries, now finds that she's paying $70 for the same items. That's inflation at work. Prices are rising and her money has less purchasing power. There are many reasons as to why inflation occurs, but here are a few drivers. Sometimes more people want to buy goods and services than what's available. So if there's a lot of demand but not enough supply, sellers can raise their prices because people are willing to pay more. So yeah, it's all about supply and demand, isn't it? Well, this is called demand pull inflation. And it's not that difficult to understand this concept. Sarah, being the it girl she is, buys avocados for her posh avocado toast that all the fitness influencers are raging about. But when she approaches the avocado aisle, she notices that there are only a few ripe avocados left, but there are 5 other people moving towards it. If we were to hold an auction for the last avocado, the person ending up with it would probably pay way more than the retail price. And when this phenomenon happens throughout the economy, we will see prices increase on a general level. Let's take a look at another driver. If it becomes more expensive to produce goods, like if wages go up or raw materials get pricier, companies might raise their prices to cover these costs. When higher production cost is the reason, we call that cost push inflation. There are, of course, several reasons as to why this occurs. For smaller economies that rely mainly on importing goods and services, the currency might even play a pretty crucial role. Let's go back to Sarah and her avocados. Let's say a pound of avocados costs 50 cents to produce, and let's say that's not changing. A smaller economy, say the EU, imports that pound of avocados for €0.50. But next month, the euro has fallen considerably, and the exchange rate is now €1.50 per dollar. The price of avocado is now €0.75, even though the production costs of avocado haven't changed at all. We can't talk about inflation without talking about the government. Good old Uncle Sam. If the government prints more money, or if banks lend out a lot more money, people have more cash to spend. And when there's more money chasing the same amount of goods, prices can go up. If this reminds you of a certain period in time, about 3 to 4 years ago, that would make sense, because this is very similar to what happened during COVID. Let's go back to Sarah and look at an example. Let's say Sarah and 4 of her friends travel to a remote island with its own economy. There's a restaurant, a grocery store, and some amenities on the island. The funny thing about this island is that all of the inhabitants receive a daily allowance which increases by double every day. So if you get 1 wallabang, currency on this fantastic island, on day 1, you will get 2 wallabangs on day 2. What do you think will happen to the price of pizza on this island? Do you think that's going to stay the same? Well, no, that will also double, because the amount of money has doubled and the value per currency unit is halved. This might be a difficult concept to get, but if you understand this, you are far above most people I find in the comment sections around the world. Another reason as to why inflation increases is that sometimes if people expect prices to rise in the future, they might buy more now, which actually causes prices to go up sooner. But that makes sense, right? If we take the example from before with our magical island where allowances is doubled every day, if you just buy 5 pizzas the first day, and you can store and eat 1 pizza per day, you can save a lot of money for the next couple of days. However, we have now infused the economy with a demand shock, and that might increase the prices even more. Okay, so that covers how inflation happens, but how is inflation calculated? And this is one of the major misconceptions about inflation. Inflation is calculated by tracking the prices of a basket of goods and services that a typical household buys. This is known as the Consumer Price Index, or CPI. Every single month, the government checks how much these items costs compared to previous months. If the total cost of the basket goes up, it means prices are rising, and that's inflation. For Sarah, the grocery bill serves as a way to measure inflation. It may not be correct for the entire economy, but for Sarah, it's the most accurate way to measure it. When people say inflation is down this month, what do you think that means? A lot of people think that this is the same as prices having dropped, but it isn't. Inflation being down means the rate of increase is down. We'll use math to cover this one. It'll be quick, I promise. Let's look at a basket of goods. So this basket costs $100 in July. That same basket costs $110 in August, meaning inflation is at 10%. And in September, that same basket costs $115, meaning inflation is at 4.5%. So inflation is down from 10% to 4.5%, but prices are still higher. Just knowing this, you will rule comment sections around the world. And that's the goal, isn't it? Winning against random people on the internet. But is inflation good or bad? The news and experts really like to paint a gloomy picture about the state of the economy due to inflation getting worse. And it's been a central part of the US election campaign, at least so far. And the fact is that inflation is a balancing act. A little bit of inflation can be a sign of a healthy, growing economy. When prices rise moderately, it encourages people to spend and invest rather than to hoard money, which helps businesses grow and creates jobs. For example, if Sarah knows that prices will be slightly higher next year, she might decide to buy that new appliance now, which helps the economy keep moving. Hashtag economist math. Buy everything you want now, because it's probably getting more expensive. But when inflation gets too high, it can quickly become a problem. Rapidly rising prices can outpace wages, making it harder for people to afford everyday essentials. This can lead to uncertainty and anxiety as people struggle to keep up with the cost of living. Let's go back to Sarah, for example. Her avocado toast is now too expensive and she needs to cut back and just eat bread with salt and pepper. What will the influencers think? Salaries might catch up though, but that can also cause instability, as we saw for tech workers during and after COVID. So while moderate inflation can be a good thing, helping fuel economic growth, high inflation can erode purchasing power and create financial stress. It's all about finding the right balance to keep the economy stable and healthy. But is there something as too little inflation? Yes. Yes, there is. Next question, please. I'm just kidding. Nothing regarding inflation is that easy. There are some words you aren't allowed to say out loud. You have Lord Voldemort in Harry Potter.
We do not speak his name.
Shank in golf, and deflation in economics. Deflation is the opposite of inflation. You have deflation when prices decrease over time. At first, deflation might sound like a good thing. After all, who wouldn't want lower prices? Going back to Sarah, she can finally afford her avocados. But again, it's not that simple. When prices fall, people and businesses might start holding off on spending, expecting prices to drop even further. Recognize this from earlier, by the way? This can lead to less demand, causing businesses to slow down production, lay off workers, or even close their doors. For Sarah, she might afford her avocados now, but what if she gets laid off from her job? Deflation can lead to a vicious cycle of reduced spending and economic stagnation. So while inflation erodes the value of money, deflation can stall economic growth, making it a delicate balancing act for policymakers to manage. But who's in charge? Like, who's the guy I need to talk to? Who controls inflation? But who actually controls inflation? The short answer is, it's not controlled by anyone. But we have tools at our disposal to limit or increase inflation. And this is where central banks come in, with the Federal Reserve in the United States being one of the most influential. The Fed's main job is to keep the economy stable, and this means managing inflation, prompting employment, and ensuring the financial system works smoothly. However, there are several examples of the Fed not making the correct decision. Their main tool is the interest rates, so when inflation starts to rise too quickly, the Fed can raise interest rates. But how does this help? Higher interest rates can make borrowing money more expensive. So if our big spender Sarah was thinking about taking out a loan to buy a new car, she might think twice if the interest rate is high because it means she'll have to pay more money over time. When borrowing costs go up, both consumers and businesses tend to spend less, which reduces demand for goods and services. That slowdown in spending helps cool off the economy and slows down the rise in prices. And this is how the Fed uses interest rates to keep inflation in check. On the flip side, if the economy is too slow and inflation is too low, the Fed might lower interest rates to encourage more spending and borrowing, which in turn can help stimulate economic growth. It makes sense that easier access to money makes us brosefs and brosephines spend more. On everything. So many dumb decisions, so many fidget spinners. Inflation doesn't impact everyone the same way though. Let's take Sarah and her friend Bob as examples. Sarah has a modest income and is careful with her spending. She notices that even a small rise in prices make a big difference in her budget, and she might have to cut back on her favorite coffee or skip a movie night. Bob, on the other hand, earns more and he likes to spend. He's not as sensitive to price increases, but inflation can still catch up to him. As prices rise, even Bob starts noticing that his dollar doesn't go as far as it used to. Suddenly, his favorite steak dinner costs a lot more than it used to. Inflation also impacts savers and borrowers differently. Sarah, who likes to save, finds that her money loses value over time if it's just sitting in a bank account. Our guy Bob, however, has a loan, and because inflation reduces the real value of money, he's effectively paying back his loan with cheaper dollars. So whether you're a Sarah or a Bob, there are ways to protect yourself through investments. Let's look at two. One very common and one very specific way to reduce exposure to inflation. The first way is through investing in assets. Sarah decides to invest in stocks and real estate. These are assets that typically grow faster than inflation. There are, of course, several reasons for why that is, risk being a major piece of the puzzle. But a certain slow death, inflation on cash, is way worse than that risk. Bob, on the other hand, is looking at Treasury inflation protected securities, or TIPS. TIPS are US government bonds designed to safeguard your investment from inflation. The principal amount of TIPS adjusts with inflation based on the Consumer Price Index, or CPI. Meaning, as inflation rises, so does the value of your principal. TIPS pay interest twice a year at a fixed rate. But the interest is calculated on the inflation-adjusted principal. This means that as your principal increases due to inflation, your interest payments also grow. When the bond matures, you receive either the adjusted principal or the original amount you invested, whichever is higher, ensuring your investment keeps pace with inflation. So back to our friend Sarah. How will she change her behavior now that she understands inflation? Well, she can just use the tips just mentioned. Haha, get it? Tips? Anyways, make sure that you're at least a little bit invested, because money in the bank, or worse, under the mattress, will see you lose money over time to inflation. If you're thinking, I need to leave this extremely high inflationary environment, not that anyone has ever said or will say that, and you're considering a move to or from the US or the EU, have a look at this video, where we highlight the differences between the two countries.